Welcome back, everybody. CNBC Pro out with a list of the cheapest S&P 500 stocks that could be buying opportunities at these prices, each down at least 20% from their recent highs, but with strong expected earnings growth and a lot of love from Wall Street analysts. For today's three-stock lunch, we're going to trade 3Ds from that beaten-down group, beginning with Disney, then to Darden and DR Horton. Let's bring in Lee Munson, President and Chief Investment Officer at Portfolio Wealth Advisors. Lee, welcome. Good to have you with us. Let's kick things off with Disney, which has been very beaten up, but has a lot of very, very good franchises.
Disney is a value investor's dream. You've got parks, which is just a cash cow. They have, there's a limited amount of people they can put in per day, and everybody wants to go to Disney. And if they need to raise prices, all they do is just flick a switch, and consumers will pay it. I think that it's suffering a little bit from the culture wars in Florida, which, Tyler, I find ironic as a guy who grew up in the 80s. Remember when Disney was hassled because they wouldn't let two boys or two girls dance together at parks and stuff? And now we've come full circle in Florida. But I think the catalyst for this stock is not just that cash cow of the parks, but it's streaming. If you have kids under 18, you know what I'm talking about. You got to pay the mouse every month to get Disney Plus. I think they have the ability to raise prices maybe in the next year or so. And this is just an all-around great long-term stock. You buy them when they're down 50%. I'm all in.
Has its political brush fire with Florida hurt it at all among customers?
I don't think so, but I think it's definitely, I'm seeing it hurt in the price of that stock. I think there are portfolio managers out there that are unsure. But when you look at the volumes, right, I was just in LA. Those parks are full. People, and let me tell you, Republicans in Florida are still going to Disneyland. This is going to blow over. It's going to have very little effect on the long term. This is a tremendous buying opportunity. If it wasn't for this Florida issue, I think this stock would only be down maybe 30, 35%, but not 50. Let's get realistic.
Yeah, it's still some of these levels today, Disney at 101, Tesla in the low 600s, just amazing. So what about Darden, Olive Garden parent? What do you do with the stock?
I have to tell you, it's not my first pick. I would stay away for a couple reasons. Where's the catalyst? Now, most traders are going to tell you that if you're long right now is you're betting on one thing, China reopening, Asia getting back to business. So you have marginal profits to lead it higher. But this was really an opening, like a COVID opening stock, right? This is fast casual. Are we going to go into a world where there's no more mom and pop restaurants going forward? Also, there's so much evidence right now, clear and present danger of a wage price spiral where, not everywhere, but in low-wage industries. Darden is a poster child for that wage price spiral. Also, if you're going to buy a restaurant, buy someplace that pays people better, that has better purchase power. I'd rather buy some overpriced nonsense like Chipotle because they can raise prices overnight and they can also pay their workers a little bit more. So I think Darden could be dead money. It's a quality company. I just wouldn't do it right now.
All right. And there's Darden again, down about 15% over the past few months and almost 30% this year.
Shall we move on to DR Horton? That's our final, or Dr. Horton?
Yes, Dr. Horton. Well, I have to tell you, I would pick this, but there's a few caveats. To me, this is a related trade on the 30-year Treasury. What do I mean by that? There's a lot of traders out there that are trying to go long Treasury or long things like home builders with the expectation that the Fed is going to cut sometime early next year. I know it's crazy. We're talking about the Fed cutting rates that they haven't even hiked yet. But that's the mentality of this market. And home builders are going to be a big recipient of it. So if you just are a value play, if you just like low valuations, I think Darden is a great pick. Here's my thing, though. I'm all for home builders. I don't own any. It's not really my client's cup of tea. They're retired. They don't like the volatility. But I would say if you want to do this trade right now, buy a quarter of what you think you want to buy and start waiting for it to make money. I'm concerned that we might be a little early to the home builder and early to buying things like the NASDAQ, but it's time to dip your toe in. Come on. You've seen the NASDAQ this week. We're down 20% in the S&P. We've got 30% on the NASDAQ. I think you could just buy anything, but just be cautious with DR Horton. I love it.
So here, go in on a kind of dollar cost averaging basis, buy a little now and see what happens a little more in a couple of months. Lee Munson, thanks for the enthusiasm. We appreciate it, man. Very nice to see you. And for more S&P 500 stocks that could be buying opportunities here at these prices, be sure to visit cnbc.com/